Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go.
Good morning, good evening, good afternoon, traders. This is Rev-UP by SageFT. This is the review and Rev-UP for June 8th, 2025. I am the creator, founder of the live trading desk at SageFT.com, where we are helping trader after trader realize their true potential in their trading. Let's dive right into where we were last week, what we're looking for, and what we're looking for next week. We'll get into that in just a second. First thing we're going to look at is where were we before we started the week technically, and what were we looking for? Well, first thing we're looking for is we're inside of this breaker block. The reason I call it the breaker block is it's the lowest sequence before the head and shoulders, before the head of the head and shoulders, before it collapsed. Now that we're on our way back up, we want to see if they can break through that prior demand level. All right, so that sets the week up. Right? So here's Friday. If I zoom way in, what you can see is we have Friday testing it, giving us a tail. So what we're looking for is next week, aka last week, we're looking to see if we get a pop through the 5982, which is this level here, or not, and if we close above it or not. So let's watch as we move forward here. Let's see if this works here, and then we'll look at the 4-hour chart. Now, what we're looking for is, do we go into position one? If you want to find more out about position one, SageFT.com, or every morning, Monday through Friday, 8 a.m. till the cows come home, we are streaming, and you can watch us use it in real time. So what we're watching for is, do we go into position one or not on the daily chart? Now, that's a big deal because we went out of position one up, and we actually went position one down for a very, very short period of time before it turned itself back up. And now we're testing the 20 period at the 200 to see if we go through it. Let's see what happens here. So price is starting to bounce. I know it's hard to see. Okay, here's the 200 and the 20, right? So and then we'll look at it on the smaller time frame as to how we played it. All right. So now right here, okay, here's where I bring in the next chart. Okay, the next chart is Tesla. This is Thursday. So if we go like this, it looks like this, right? This was the actionable catalyst. All week long, it was chopping along, waiting for something to happen. And then we finally get some sort of catalyst. Okay, it breaks the downside at the end of the day because of the remarks between President Trump and the richest man in the world, Elon Musk. Elon Musk is the CEO of the Tesla Corporation. And so what happened is it dropped 14% in one day. Now here's the deal. I didn't expect it to stay down like that. And so what we're watching for is on the day, it closes low like that. But what does it do the next day? Well, okay, the next day, it's as low as 260. What's the low on that? Low of 273. Okay, and it closes the next day of a low of 291. Now watch what it does to the stock market. Boom. It's that big of a deal. Okay, so if it's that big of a deal, how did we play it? Well, what we know now is the 20 and the 8 were moving up. Price was above it on Monday, Tuesday, stall Wednesday. They tried to divert attention. There's the settlement. Here's the closing bell. Here's the settlement. So settlement's a little higher. So what we wanted to see was, could they close? Notice none of these close above here. I mean, at it, above it, at it, not above it yet. Okay. Now it closes clearly above 59.82. So that's where we're going to move into next week. But let's take a look at how we traded it throughout the week. What we had to do was, on the 4-hour chart, wait for it to go back into position one. So when did it go back into position one? Okay, well, the 26th of May went back into position one. Okay, and then right here on June 3rd, it went back into position one. Again, find more out about position one, SageFT.com, or the live streams on any one of our social media platforms. Okay, so now notice this right here between 81 and 99. Let's take a look at what it is. It's this, I believe it's a fair value gap or the next block here. All right, so now that was the challenge. So if we scoot that over, notice fail, can't close above it. look at that, look at that. And this is the 4-hour chart. Fail, come into it, fail, now close above it. And so what the way that we traded it was, we wanted to wait till it went back into initial position 1, take the pullbacks. It's kind of sloppy on the 4-hour. So how did we trade it on the, what we did is we went down to the 15-minute chart. Taking a look at the 15-minute chart, you can see that there were several opportunities where we remain several times, clearly to the upside and the downside. So we just wait to go back into position 1. We just wait. This is last week before. So we're waiting to get into position 1. Now here's the crazy thing about all this. Most of the price action happened overnight. And then what they did is they bought into the Asian session, flattened into the European session, and then sold the American session. Okay, and then accumulated into this week, right? And then as we get into June 2nd, June 3rd, let's take a look at how they did this, right? So they accumulated into this demand zone here, the all-time breaker block. Remember that this goes all the way out to the daily chart. You can see it here. They go all the way to the bottom of it, test, sweep, roll. Okay, now we're back into position 1. Okay, but what they do is they find a seller in the Asian session here. They buy it back the end of the Asian session, into the London session, and they rip it higher back into position 1. You can see here. This is on the 15-minute chart. Also lines up with the 4-hour chart because that's what this big blue line is. So then what we're looking for is on the 15-minute chart, we're looking for it to go give us our patterns. Now what are our patterns? Again, everyone has their own. Find yours. Let me help you find yours. I have mine. You can watch me trade mine. Every morning, 8 a.m. Goes sideways, chops a lot of people up. All right, so now right here, folks, I'm going to admit I got smoked like a pack of cigarettes. Smoked. I overtraded, broke my rules, and I got paid. I got the opposite of paid for it. I got punished. Brought myself into alignment and absolutely had a wonderful, wonderful Friday. We were one and done right here. In this sequence right here, look at this on the 15-minute chart. It goes back into position 1. Shkabing, shkabang, shkaboom. You're a buyer only. And then the rest of the day, you didn't even need to trade anymore. All right. So now what are we looking for next week? Okay. Here's how this works. We have to think about this statistically. Statistically, because we're moving into a fresh position 1. I actually, on this bar right here, tomorrow night, if this closes just a little bit higher, I have to buy a call. I have to buy some calls. Because we're going to get a buy signal on the daily chart because we are moving into position 1 on the daily chart. So if we're thinking about, well, what is going to happen next week? Statistically speaking, it's going to move up. The outlier is they drop it like it's hot. Okay. And the other outliers are the tape bombs. Tape bomb is where out of nowhere, something comes up on the Twitter or the something somewhere somehow, and it moves the market considerably. And then what happens is it readjusts itself back to where it was or to a new agreement in price. Now, looking at the 4-hour chart, what we want, here's how this works. Let's draw a very simple line. Let's just do this right now and get it out of the way. Okay, boom, bam, bing, bang, bong, done. That's it. We either go way above this line. What's the next test? 52, 66. Big gap up here. Okay, so now let's look at this big gap right here. Let's bring this into alignment for the upside, right? And then we'll look at the downside here. We're on the 4-hour chart. All right, so there's our upside action. 6105 to 6164. Okay, let's look at the downside. I'm going to draw it the same way. Okay, now there's one that has not been touched. We must obey. All right, so here's the levels, folks. Very, very simply put, let's not make this too complicated. Okay, we've got this green line. We've got Mancini major pivot 5743. Okay, and then any one of these blocks. And also, do we go back into the all-time high breaker block of 58.58 and 59.68? How do we play it? We wait to be back into position 1 on the 4-hour. We wait to be back into position 1 on the 15-minute. What I would like to see is a fresh 15-minute position 1 from a flat 20-period simple moving average. I would like it to back off of this considerably and then push up. Okay, or push up, retest, and go. I'm not so sure. They could run the clock out. They could keep going sideways. That would hurt a lot of people. Now, the other thing that I was thinking of, right? We can go to the 4-hour chart and see this. Even though all of one side of the aisle has all their money in their 401ks, they're still boycotting this chart here, right? And when you boycott a company that's very, very powerful, okay, it doesn't end well, right? Think of the opposite of GameStop, okay? What I mean by that is shorting against Tesla doesn't work over 10,000 trades. Okay, so here's what I mean by that. The people the pundits get hurt the quickest if the S&P 500 goes straight up. Here's what I mean. One side of the aisle is blaming the other side of the aisle that has the president for stock market losses, right? If you just go on the internet and you kind of just search around and you look, you can see that they were blaming, $7.6 trillion wiped out of the stock market, blah, 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 blah. Okay, now, here's the deal. And I'm going to say this, and I want everyone to listen. As it moves into all-time highs here very shortly, can those pundits still use that as their DJTS? The narrative falls apart that the tariffs aren't working and all sorts of things. Now, the real reason the stock market is going to go up again through all-time highs is very, very simple. Do you see the pattern? That move is huge, right? These are small moves to be corrected again. They've flushed it all at one time. They got all the, okay, YouTube, don't ban me because this is not a derogatory statement. They got all the hate out. Okay, they flushed the weak players, and the money on the sidelines was allowed to enter the market at fair market value, okay? Because it moved so quick, the odds of it moving back, once it goes above 50%, watch this. This is a crazy statistic. And this is a real statistic. If you go into a bear market, right, and let's draw the bear market right here. Okay, so from 62.18 to 48.32, that's their bear market. If it goes above the 50% retracement, the statistical odds of it going to a lower low before a higher high are very, very, very extremely, very, very, I know that's not actual English, very low. Statistically speaking, if we bounce through that 50%, and you guys can check me on this, I think it's only happened once or twice in history where it went up above the 50% retracement and then went lower. Once or twice in history. That's how strong this is. So where are we getting with this? Left side of the aisle, right side of the aisle? Okay, I don't care which side of the aisle. One side of the aisle is going to be very, very right, and one's going to be very, very wrong, and they're going to blame the other. Still, they're going to have no leg to stand on to blame any further if this pushes into all-time highs. So they're going to have to join the buyers. Okay, so let's think about, statistically speaking, we just went position 1, fractal 1, position 1, up on the daily chart after being down 20%. We're above the 50% level. We just had a perfect correction down to the 20-period simple moving average. So either we're going to either the retail traders are in for a delight upwards, because most retail go long, or the retail traders are in for the waffling that they've never experienced ever in their entire life. Okay. Or the third one, it goes sideways and everybody gets wrecked. Here's the deal. If I recognize that it goes sideways, okay, I'm going to run the clock out on the run the clock outers. If I recognize that it's ranging hard, I've got a trick that we're going to do this week that's going to stop us from over trading before it happens. That's going to do it for me. If you are a micros trader, Take Profit Trader has 50-cent commissions on their evals and their pro accounts for the micro contract. Use code SageFT at checkout or click the link that we're going to provide for you, and you'll help promote the stream, you'll help support the stream, and you'll get the best discount at any one point in time that they have to offer. That's going to do it for me, folks. Slightly bullish. I'm no fool. We've got both levels, both sides. We've got a huge gap above us, and then it's all-time highs. How quickly can it get there? Or how long can they stall it out before it happens again? Or Are they going to seek the value, the real value level that you see there on the chart? Let's take a look at what that is. Let's click on it real quick. Okay. You can see the real value on the chart. That's the actual price that it should be worth, maybe on the lower side of it. The only reason this should continue to move higher is this is what your grocery bill looks like. This is what inflation looks like. Everything here is paid for in dollars. Don't forget to smash that like button, subscribe, follow, retweet. Thank you. We'll see all of you tomorrow morning. Thanks. Good night.